Good morning, everybody. Good morning, good morning, good morning. Somebody give me a sound check in Slack. Let me see if you guys see me. You guys share the screen. Good morning, Kelvin. All right, let's share the screen. Screen 2. Share. Okay, awesome. Good morning. Okay, a lot of cool stuff I got to show you. Let's just make sure everybody crawls into the room here. Let me see how we're doing. Oh, wait, sorry, you guys not seeing it. Okay, now you should be seeing it. Okay, cool. All right, you guys seeing the thing? Okay, I'm gonna start trading right away, just and then I'll dive into the kind of stuff that I'm doing. But this particular trade that's setting up, if it holds the strong break, I'm gonna get long here on the close with a 20 stop and a 5 target. If it completes, it's obviously the big if here. We have to see it. It seems to be, we'll have to see if the opening rotation still got 30 seconds on the clock. I love TradingView because it's it captures all the data that we need to see right then and there. You guys are seeing the countdown and the candle, right? You guys are seeing everything. So we'll see. I'll see if this trade goes off. I'll let you know. And if it works, it works. It doesn't work, it doesn't work. But there's a principle. Okay, so I'm in the trade, targeting 66.75 on the futures. So whatever that is, and I could get just completely stopped out on the open. Looks like I'm going to. We'll see. Surviving the vicious little drop. But it's an open trade. I'm kind of experimenting to see if and I got tagged, so it's just a fake out. So that trade didn't work. But the principle of the idea here is going to be very much alive, because I want to show you a concept that I work on that is kind of diametrically opposite of what I call the one good trade a day. This is kind of multiple good trades a day. But let's just see how this plays out. This may just simply have been opening round violation. I'm going to watch how this candle close. If this candle closes green, I'm going to go back into the trade. So far, no. So no trades yet. I just want to watch the first couple of minutes to see how the trade opens up. We're still basically positive bid here, and I want to see if the buyers will regain traction here. Well, let's give it a shot. Yeah, it's much easier to see. It's really, really clean. I mean, the rule of thumb in life is TradingView is for visuals, and MT4 is for execution, or MT5 is for execution. Yeah, so nothing. No. I mean, it looks like they, whatever bid they had on the open, they just completely killed it. All right, so now we're going now we're trading negative, and I'm gonna watch a couple more candles here, and then I'm gonna try to explain to you what I have in mind as an idea that I think is kind of cool. Wow. So we've been selling off all morning long, opening a rotation, try to take us up, got completely rejected. But they keep buying. Interesting thing is they keep buying the bid here. They keep buying the pre-lows. If they don't break the pre-lows, my suspicion is that it's gonna it's gonna be a positive trade to the upside. Watching this candle, seeing Sellers are really pressing this trade. Let's see how the next couple of candles show up. If we start turning negative, then clearly the bias is going to start turning negative. But it feels like they keep buying the But this candle is very interesting. If this candle closes to the highs, you kind of just want to trade this to the upside because it's a big turn. I'm actually going to trade it now. Let's see if it holds. I'm rushing the trade, but I'm going to try and trade it for 5 points, which is going to be, well, let's see. $2 I wish it would have closed. I rushed the trade. I should have waited till the candle closed. I don't have as much confidence that this is an upside trade, and it could be just another downside trade. Again, holding a 20-point stop on this with a 5-point target, it's really bad odds and probably a stupid trade. But I'm playing the idea that they kind of bought the bottom here, but that it could have just been a big fake out. If this closed on the highs, that would have been a much better signal for us. So I'm just playing around on the opening rotation with very little confidence that this thing is going to work right now because clearly got faked out again. So. Wow, there's a lot of two-way price action here as everybody's fighting for domination on the open here. No. Nope. Looks like we're gonna make fresh lows. So, well, hang on. I'm gonna just basically hang out to see if this low gets broken. If it does, then clearly I'm wrong. If they can just patiently hold on here, maybe they turn it around. This is not a strategy trade. I'm just basically trading the open right now, which is very, very bipolar, kind of like two-way trades. It's time to make. Let's see. We pressing a fresh low to the downside. So we clearly making new lows here now. Still trying to see if they break this low, then clearly this is a wrong trade. If they don't, just my shred of hope that this is going to turn around. But I was wrong on this move. I was kind of swayed by this big breakout move, and the fact they held the bottom. And let's see if my suspicion holds. This is going to be a good candle. It's an important candle. We'll see if this candle can hold. I have no idea, Peter. The EA is not meant to be trading, on a continuous basis. So, yeah, I have no idea what your settings are and what you did there. I'm basically just fooling around here on the opening rotation, pretty much getting my head handed to me so far. It looks like I'm wrong. Yeah, I'm just absolutely wrong. So they are going to make fresh lows here, and there's no. I'm out of this trade. This trade is just completely wrong. Okay. So and now they're establishing a short, which is a much more dominant trade at this point. And I'm going to try and I took this short for 30 points right now. I've done, at least I recovered a little bit of my short here. So now we actually get a strong break. And I'm going to watch this candle here because now I'm going to trade again 520 And this could be really interesting if I get busted out on both ends of it. But and so far I'm not getting a sell signal, so it doesn't really matter. But I'm kind of just showing you that the action in the battle, and I'm going to try to explain to you what I'm trying to do here. So we got 25, 26 seconds to see if this actually is going to be a short setup for me. And my short side algo is going to trigger this if it is a short setup. Okay, triggers with the target is going to be 0550 to the downside. So we'll see if that makes the target. Again, 20-point stop, 5 target, that makes target. So now I'm done. Okay, so one of my brilliant ideas actually worked. But what I'm trying to show you is what I call the insurance way of trading. Okay, guys, I don't want to talk about the EAs. I really don't want to talk about the EAs, okay? I want to show you the strategy. I want you guys all attention focused on the strategy. Don't ask me anything about the EAs. I'll be happy to talk about them on Friday. We'll make Friday support day. Any other day is going to be trading day, okay? So let's do that, okay? Don't distract me with we're not doing tech support during live trading, okay? So let's just focus on what I'm trying to show you here. So I got clipped on this one, which is fine. That's par for the course. I made money on this one, and what I want to show you in broad principle is what I call the insurance model of trading. I had 2 thoughts yesterday that kind of really opened up my mind. One is the idea of let's trade just one good trade per day. All right, and actually I'm going to start with that idea first because it's very simple. And then I'm going to show you a different strategy where you could use the EAs. This is the thing. This is really designed for the EAs. Remember, EAs are dumb, stupid programs that will take every single trade you program it to do. So they are never ever going to make you money unless you put them in a very defined controlled set, which is what I'm going to try and show you here. But let's start with one good trade idea. One good trade idea every single day that repeats over and over again is what I call the reversal of the opening half-hour trend or the opening hour trend, depending on how it goes. And the best way for me to demonstrate that is let's go back to a week from, let's go to Monday, the 12th, and just show you day by day market open rotation and how this trade works, right? So I'm on New York time. And everybody sees. So this is New York time, 9:30, right? Market open. Everybody sees this? Everybody's with me? We good? Okay. So every day when the New York market opens, there's always some kind of a directional move. The move can be up, the move can be down, and generally, that directional move lasts between a half hour to an hour of the open. So on Monday of the 12th of April, the directional move is to the downside, right? We absorb all that. We just let the move happen. And what we're looking for is just one trade each day that I call the reversal of the main move. And the reversal always comes. So in this case, the reversal, and in order for the reversal to happen, we obviously need a strong break the other way. It's got to be a strong break signal the other way. So in this case, we're looking for a strong break signal to the upside, 10-20. We get long over here at 95. It goes well into it basically goes 10 into our direction. So, if you trade it with a 20-10, you have a very high chance that you're going to get at least that 10 points. So that 10 points gets done, and that's it. We just leave everything else alone. We forget everything else that trades, and then we go to Tuesday. Okay, I'm going to trade every day with you up to today just to show you this principle. You really need to kind of absorb it in your mind's eye to get the full impact. So now I'm on Tuesday, the 13th, and Tuesday the 13th, the trend is up and up and up and up and up until, right? And what I'm really looking for, as I said, I really want a strong break, right? So if I don't get a strong break, I guess you could take the break, but I'm actually gonna just hold off and see, because I haven't really looked. I didn't look at the Tuesday chart strongly. The trend is basically up, up, up. I really need a strong break to the downside in order for my trade to happen. So in this case, let's say I don't have a strong break. It's 15:30. I'm done. I'm just not taking any trades. If I don't have a strong break, I'm not taking trading. You could cheat and say, well, it's 11 o'clock. It's the usual reversal time, which usually happens between 10 and 11 o'clock New York. I'm going to take the break signal. But let's just stay very, very strict and say no. We got no reversal signals that are legitimate. We're not going to take it. So no trades on Tuesday. Then we go on Wednesday. And I literally haven't looked at this chart. Okay, so I just wanted to show you. So I have no idea how it's going. I'm as going to be as surprised as you are in what happens next. So we get negative trend. Obviously, sees a negative trend. We need a strong break to the upside on Wednesday. Do we have a strong break up to the upside? So we have a break? No. We have a strong break. Yes, this strong break actually, I think, does okay. We're at 10, 11. It goes up to like 18, 19. 8, 9 points. I'm not going to quibble. If you make full 10 points, you may not always get the full 10 points. But I think if you're trading like sort of like 8, you're almost always going to get that 8-point reversal once you get a strong break. And this was a very tough day. So it's a huge amount of selling going on here. I mean, if you look at this, it's 11 on the close, and the highest here is 17, 25, 18. So 8. Yeah, you get 8 points. Let's just make it 8 as our sweet spot for the reversal trade. Okay. We move on next to Thursday. And now Thursday, we're biased up 9:30. The opening rotation is up. Opening rotation is up. Now we're looking for a strong break. We get the strong break at 11:28. Boom, certainly 8 points done. 8 points done. So now I Monday winner, Tuesday no trade, Wednesday winner, Thursday winner. Right. Let's go to Friday. So Friday, I am opening rotation, negative trend, right? Friday is negative trend. I'm looking for a strong break to the upside Friday sometime eventually, right? I don't think I get it. I think I get the break, but I don't get the strong break. So literally, I can't. No, I get the first strong break. So this is the first strong break to the upside that happens here. Obviously, I make the 8 points here. So now I have 4 out of 5 days plus 8. That's 32 points. No losers, and Tuesday was not a trade, right? Very, very disciplined. Let's go then to Monday. Let's go to Monday, and then we'll go to Tuesday. And by the way, we're starting to break to the upside big time. We may be building I'm watching my up algo, see if that triggers my upside trade. I'll let you know if I have an upside trade. Just a second. So now we are on Monday. 9:30 is actually positive break. This is all opening up positive break, and then it turns negative break, strong break. I make 8 points here. Okay. So now I'm 5 for 5 with a neutral day. So again, you notice what I'm doing. I'm doing the exact opposite of the opening rotation, and then I'm looking for uh, Tuesday. And Tuesday, I'm looking at what's happening on my open. Tuesday, the open is positive. The open is positive, right? Open is positive. I have a break, not a strong break. So I really don't have a legitimate trade. And I don't really have a legitimate trade here. And I have a legitimate trade here until I finally, I'm super patient. I finally get the strong break off the open to the reversal side and boom. Okay. So the whole point is I have to be super, super patient. The beautiful thing is I don't have to be patient. This is where I can set my algo. My algo is set up to take only strong break to the short side. Once I know that the long side is the dominant trade. Once it trades, boom, I'm done. I just turn the algo off. Or eventually, what I will have in the algo is an auto. I don't even know if I need this. I think there's a script that somebody wrote where you could just once the algo does a trade, it turns itself off. But we could do a self single trade self close function in the algo, no problem. But anyways, you see, the point being is, so we had 8 opportunities or 7 opportunities because there was no opportunity on Tuesday. All seven were winners, and now we are today. Now we're today, and now we're looking to see what's going on. And where are we today? Oops, what happened here? What did I just do? Oh, damn, sorry. How did this happen? Okay, sorry. Okay, so here we are today, right? So let's go to the end of the day today. Today, honestly, you can't really call this either. I mean, it's basically, I would say it's the negative trend. So the opening trend was negative, which means that the counter trend has to be positive. So that means I am looking for a strong break to the upside as my counter opening trade. Like today is a very very crappy day. There was like what 15-20 minutes of negative price action. Usually we have I really want to have half an hour of sustained price action one way or the other. But it'll be interesting to see. I mean, like we're living the experiment now. Let's see. According to the analysis, so we opened up negative to the market. That means we're looking for the first contrary signal to the opening trade. We want to see strong break to the upside. Is it going to happen? We'll see if it happens. So that's one good trade per day. It's kind of interesting, right? And then now we're getting a strong break, and let's see if that if that works. It's got to hold. We're still a whole bunch of points away from here. And today's price action is really, really challenging. I mean, really challenging. It's very, very psychotic, right? Big sweeps up, big sweeps down. Nobody really seems to have control of the market on the NASDAQ side. NASDAQ is really getting hit by the Netflix news. So there's just a lot of crap here. It's not like it's an obvious signal. So we got nothing on this candle. We'll watch the move. And we can switch. I want to switch this thought pattern to the Dow. Well, I'll use the Dow futures just to run the Dow. We don't necessarily have to run all the way from last Monday, but we can just take a look at maybe from last Wednesday onward. The reversal of the dominant opening trade, and can we apply the same idea away from NASDAQ? But in principle, does everybody understand what I'm doing? Because I want to take you through so many examples, so it's working. Okay, cool. Okay, I'm still watching the C. We got 52 seconds here. We'll see if it All right, if this turns negative, let's go back and do a little bit of historical trading on the Dow and just take a look at the Dow. So this looks like it ain't doing anything. I have it on my algo, so if it triggers, I'll let you know. Just watching it here. Really have no feel. I mean, the market clearly trying to push the positive bias. You see the massive divergence between the Dow, especially Dow is up 31 basis points. Look at the Russell. Russell is really strong on the move. But you know, Nas is struggling today because a lot of the high tech euphoria seems to be seeping out of the index. Yeah, and Netflix really put a kibosh on a lot of index. But you know, we're starting to get another look, starting to get another pop here, but not, you know, can't seem to hold it. Man. And nope. Next one tries. Okay, so we're not getting it. Let's just take our attention very quickly to the Dow, and let's go back to, I don't know, let's go to last Thursday, the 15th, and we'll go to the opening rotation trade on the Dow. All right, so opening rotation trade on the Dow, obviously to the upside, obviously to the upside, obviously to the upside, right? Obviously to the upside, and the Dow strong break trade here would probably fail, because if we're using, depending on how much push we get. So what is this? This is 81, and the absolute low here was 77. Yeah, it really, this did not go much. Although I'm trying to see if I used like a big 40. Yeah, I think, you know, I'm getting, this is the 1 minute bars on a Dow, so I'm kind of getting confused. It's 3881. If I'm using a 4020, that would put me at 3920 down to 61, and that certainly gets it close. Even if I use 3015, it gets me close. So this trade, if you gave it wide enough move, would have worked. We're actually getting a bust. Still, wow. Nas is really struggling with the upside move. So I'm looking. I'll tell you if the Nas triggered. Let's go to Nas here. Nas got 6 seconds. Looks like it's going to trigger. So let's see if this runs for us. Okay, so it triggers, and I'm looking at 98, and I get done on +5, and it goes a little higher, and yes, and here it goes to 6-7 points. So if you guys got triggered on that trade, that worked. Okay, and it's probably going to work for a good 10. It's probably going to extend, but you know, the algo took the trade for the 5 that I'm looking to do here. This is, my algo is not trading the one great trade a day, but this just simply proves that, okay, the one great trade a day today, which was the reversal trade, worked, right? This would be like the 9th in our cycle, right? And it just, you know, it busts out to the upside, to the move. Let's go back now that you guys saw the Nasdaq +12. Miguel Toreador. Miguel spears the bull. Very nice, very nice. Let's go back to the Dow, just for intellectual curiosity. We were on Thursday, on the 15th. That kind of worked if we did a sort of a 30-15, which I think is probably okay for the Dow. And now let's go to sorry, we were on, I think was it 15, was it Thursday? Whatever, let's go to the 16th. Let's go to the 16th, whatever 16th is. So 15th is this, we already went through the 15th. Okay. Okay, now we're at 16th. And market open, bias up. So strong break to the upside. We're looking for now strong break to the downside. We're looking for a reversal of this thing. We get a strong break here, right? Again, let's say we use a 30-15 target. So I'm at 47, 46. I'm looking for 30. My stop would be 76. I have plenty of room for me to survive my stop. Do I get to like, I get 27. I make 30. I make 15 points in 2 minutes. So again, so 2 for 2 on the Dow on the 16th. Keep going, keep going, keep going. Now we're going to Monday. Okay, so now we're going to Monday. Oh, okay, let's go Monday. I wonder if there's a way to like move this fast with a hotkey. If anybody is a trading view guru, help me out here. Okay, Monday, where are we? We are negative bid to the open, So we're looking for a strong break to the upside. This, I think, fails. So yeah, Monday really blows us up. This really doesn't go. Like, I mean, it's straight up, first loss. So if we're trading both Dow and NAS, so we had like 8 straight winners in the NAS, 2 winners in a Dow offset by a loser. So 2-1 in a Dow. Let's go to Tuesday. What is this? Why can't I, how do I, I need to center this. What is this? Auto fit status. Okay, there we go. That's what I want. Okay. So we go to yesterday, 20th. Krasi, what's 80? 80 what? Oh, Dollar Cat. Oh, you're watching the, sorry, I'm not watching FX right now. So, because it's probably a Bank of Canada decision, right? Sorry. So I'm just wanted, to focus you on the strategy right now at the exclusion of everything else. Okay. So where am I on the Dow here is just really sloppy, but you could say that it's negative positive bias, right? It opens up negative, more or less positive bias. So you're looking for a -1, boom, trades down. So now you're 3 for 1 on the Dow. And where are we today? Let's go to today. That's what happens today. So NASDAQ already worked. The Dow is positive bias. So now we'll have to see if the Dow gives us a strong break to the downside sometime during the day. So we're looking for that one reversal signal to the opening range of the day. No problem. We get that, that will put us at 4-1. Remember, we're 1-2, so if we're at 4-1, we're net positive on the Dow. We're certainly very, very positive on the NAS. So everybody having a good time with one great trade a day structure, where we just take everything that we learn, all of our entry criteria, all of our analytics, and just patiently wait for that one reversal signal of the opening rotation move. Because the stock market is designed to screw you every single day of your life if you're day trading. I mean, the stock market is never going to be a unipolar, what was the word I'm looking for? A continuous trend moving mechanism. It's always going to move the other way, the opposite of whatever way it's moving, just to stop people out. What is the word? What's the word I'm looking for? It would be like unidirectional. So what I'm saying to you, Cheryl, is You don't need the strength. You don't need the patience. The patience is in the EA. You know what the bias is. Okay, you guys want me to show you how you would set up the EA? I'm going to show you on the 5. I'm going to show you on the MT5 so you guys understand how I would set up the EA to handle this particular trade, right? So let's imagine we are, okay, well, you know, we're here. Let me just get a new chart here. Chart window, right? So let's imagine we have opening trade rotation to the downside. So now we're looking for one thing and one thing only. We're looking for the breakout trade to the upside that comes next, right? And the way we would do that, and you know, if it was the other way, you would set up the other way. The way you would do that is super simple. You'd go into is it Combo Trader Beta? I guess it's the beta one that I think it's this one. Okay, you go into this. Let me just see which one I have. It's got to be one. Which one is this? Yeah, 1.4. 1.4? Cancel. No, this is not the one I want. Let me see which one I have. Oh, I have like an old ass version of this. Shit. Oh man. I think I have the old ass version of this. Okay. Anyways, let me just sort of show you how you would set this up. And you know what? If you want, I'll upload the preset settings so you can basically see it. So, and I'll do them both. So let's say we're short. So now we definitely want to only go long only. So now we only long only. We want the entry to be strong trend break only, not trend break, but strong. No, sorry, not trend break, strong, only strong, right? And you know, everything else we just ignore. Everything else we ignore. We have the stop loss. This is in futures ticks, obviously. You'd have to set up the CFD ticks to 200, and the target. This is at 10, but what I would do is I would set it to 8 just to give myself full confidence that I'm going to hit those targets, which would be 32 ticks, right? You'd set that up, and that's it. That's all you got to do. Let it go, and let the EA take the trade when and if that particular signal shows up. Because remember, the opening rotation is all negative, and if it's a super negative trend, it could be like 3 or 4 hours before the trend eventually begins to reverse, right? That's what, you know. What do we have as our strategy? We're in trend early, and that means that when we have a reversal trend, we can capture that early trade quite well. Okay, so that's that, and that creates a single trade for the day. And obviously, you could do that on the NAS. We can do it on the Dow. Probably could do it. Certainly could do it on the S&P if we're trading futures, and probably could do this on Russell as well. You know, as a reversal trade. But let's just keep it simple and keep it on NAS and Dow. It's enough. It's enough. If you're talking about, let's just imagine we started last week. We have like 9 winning trades in Nasdaq. We have 4 winning trades in Dow and 1 losing trade. So we're, you know, like 100 points to the good with very minimal effort, with just a single trade, single trade done by our EA. All we need to do is look at the stock market price action in the first half hour of its day, and then leave everything else to the algo. I think that's just a really cool way of low stress trading, right? Everybody with me on that? Does everybody understand what I'm saying? Okay. So then if you want to trade much more actively, and you know, remember, I always have this analogy: you want to trade like an insurance company, right? And if you want to trade like an insurance company, you gotta first understand the rules of the insurance company. And the rules of the insurance company have like 3 interesting components to them, right? The first rule is that they trade with their ridiculously bad risk-reward ratios, right? I mean, you're paying $2,000 to get $1 million life insurance. That's, it's horrendous. If I die, it's really bad odds for the insurance company. But that's how they play, because they know a couple of other things that you don't, right? So number one, they play with really bad risk rewards because they understand the only way they can operate is if they operate with those big odds. Because if you said, oh, pay me $50,000 to protect yourself for $1 million, nobody would ever pay them. But $2,000 they can extract out of people with tremendous amount of ease, right? So that's number one. The second thing insurance companies do is they, first of all, set the limits to how much they're going to lose. So if I'm going to insure you, you pay me $2,000. Typically, actually, $2,000 only buys you like $500,000. They're going to capitate their losses. So we always have to trade with a stop loss, right? So very negative risk reward ratios, very, very strict stop loss, capitate our losses. Number three, we want to trade lots of numbers. The winning here is not in one good trade, but in many trades. The whole point is to do lots and lots of numbers, because only 1 or 2 people are going to die, but you need to collect from 1,000 people in order to be net profitable. So you got to make 1,000 trades, lose a couple of trades, and in the end, the net difference will be profitable, right? So that's sort of number three. And then there is the fourth component, which is utterly underestimated, but literally is the difference between winning and losing in insurance. And that component is what we call pool selection. This is why everybody hates the insurance companies. But if you're if you're running an insurance business, this is exactly what you want to do. The whole point of insurance is you never, ever, ever want to sell product to anybody who has a reasonable chance of collecting it, right? Insurance is the only business that sells nothing, whose profit function is based on never, ever delivering any value to you, right? Except peace of mind, right? Which is what they love to do, right? So you think about that. There's, Starbucks, its value is to produce a really good cup of coffee, right? Amazon, its value is that it's going to deliver that package to you. There is a positive physical act in every economic transaction we do, right? Insurance is the only business that basically whose whole model is based upon not fucking delivering to you the one thing you want, which is money, right? Which is great. So to do that, you need to be extraordinarily rigorous in who you're going to sell your product to. You're selling life insurance, you only want to sell it to really healthy people with good eating habits, and generally as many of those people as possible. So what that translates for us when it comes to NASDAQ is that the only time we want to trade the strong break signals is during the highest liquidity hours of the day, when the strong break signals have a reasonable chance of continuity. Does everybody understand what I'm saying? Let me know if you're kind of grasping what I'm saying here. We want at least some continuity. That some continuity, generally, today is actually one of those days where it's really interesting. Today is one of those days that, where the hurricane hits you. Occasionally, insurance company sells insurance policies to a whole bunch of people who are healthy and well, and I don't want to get macabre here, but let's say there's a big tidal wave and they all get blown out, right? So force of nature. But again, those are rare and few and far between, and all of that is incorporated into their risk model, into their capital model, into all of this stuff. Now, sometimes nature can completely overwhelm you, and that's it. sometimes the market can blow you up completely. Nothing you can do about it. But you can do the best you can. Otherwise you can't exist in the world. You got to take the best chances you can. So anyways, my point being is if you're going to take sort of the highest liquidity times in the equity market are basically 6 a.m. New York, which is when the early New York traders get on the desk, and London is obviously at full market and morning capacity, and a little bit of Asia is still around at nighttime to try to finish up some of their trades. To the market closed New York. Like you basically say 1600 New York, right? I cheat a little bit, and I kind of incorporate the Asia Open into my highest liquidity time zone. But here's what I know for sure. That after 8 p.m. New York, 2000 hours New York, till about 6 a.m. New York, I want to stay the F away from equity futures. Because yes, sometimes the world blows up and sometimes they go really, really crazy. But 9 out of 10 days, they do nothing. There's no continuity, right? We all know this. We know that from basically after the Asia Open until we get to the New York Open, nothing happens in equities most of the days, and we don't want to be in that trade. But if we're in this trade, from 6 a.m. to 7 a.m., let me just run this by you from the beginning of this week on NASDAQ, and let's kind of play around with it. So I'll start Monday. Go. And I'm only going to take strong break signals, and I'm only going to take 5 points out of my move with a 20-point stop. I'm going to trade very, very negative risk-reward ratios because that's the only way I can ensure myself high chance of winning. Okay, so at 6 o'clock, one winner. I'm taking strong breaks both ways. So both ways. So one. I think this is a loser. This is a loser. It's 46, 53. Yeah, it's a loser. So sorry, 1, 1, 2, 1. So 3 winners, 1 loser. Let's just count them. 4 winners, 1 loser. 5 winners, 1 loser. This is actually a winner. I know it's hard to believe it, but it does make 5 points. 6 winners, 1 loser. This is a winner because even though this looks like it retraced against you, you survived the stop. So 7 winners, 1 loser. Okay. This is a fake. So 7-2, 8-2, 9-2. Okay. There's a lot of signals here. This actually, I think, breaks it. So you go down here, 64. Yes. So this actually makes the 5 points. So 10-2. Right? Because I'm only going for a very, very small amount. 10-2. This is 10-3. It's a fake out. This is 11-3. 11-3 on Monday, right? So okay, I mean, and I'm not gonna, if I'm gonna trade Asia, I'm only gonna start trading Asia one trade. I usually like to make, one trade at around 7, 8 o'clock at night. So if I'm, trading Asia Open, this would be 20. I'm looking for 25. I survived the retrace, and so here I have 12-3, right? I'm 12-3 on the on Monday moves, which is not a great day actually, as far as movement because there was just a lot of Monday was a very, very sloppy day. So now I start Tuesday, right? And again, I'm looking from 6 o'clock onward. I'm looking for strong breaks. I'm going to ignore the break. This is a winner. So now I am 13-3, 14-3. I think this is a winner. I'm not sure. 71. Yeah, because this extends to the downside for 5. Was it 14 to 15-3, 15-3? Because remember, this doesn't even. Oh, sorry, this was a break. This wasn't even a trade. This wasn't even a trade. So I'm at 14-3. Strong breaks only. Break. I'm ignoring the breaks, looking for the strong breaks. 15-3, strong break. 16-3, 17-3. 17-3, I stopped trading, during the dead hours. Maybe I want to take one more trade to the upside, which would be like the 8 o'clock trade, which would be like right over here, 18-3. If I want to give myself, but let's say it's 17-3. Then I get into here, and where am I? So I start at the 6 o'clock hour. This actually, I was in this trade. It looks like it was going to stop me out. It didn't. I managed to survive because I had a 20-point move. So that's 19.3, 23 to the downside. This trade, on the open blew me out. So that's 24, but this is 21.4 and 22.4. So 22, to the 4 at 20 to 5. Multiplying that out, this is over a three-day basis. Remember, I'm just running it continuously. It's actually not so bad. So you got 22 times 5, which is 110. 4 is 80. So I'm net 30 points. I'm net 30 NASDAQ points into the 2.5 days of the week, right? On a continuous trading basis. So it's a thin margin, like everything else in life is a thin margin. The break even here is 80, and I'm basically, if I'm doing 22 out of 26, I'm at around 85, 84.6. In a perfect world, I'd love to be at like 87. This was a very, very tough week of a lot of very bad bounces on the opens and everywhere else. But it's still, I'm still 5% on the win spread. If I can be at 7%, if I can be 87 to 80, I'm doing very, very well. And that's the bottom line. The whole point is that this is a strategy that is completely automated. I just turn it on at 6. I close it off at like 1600, and then maybe turn it on again for one trade at the 2000 hour, just to give myself that that one possible trade. But regardless, look, nothing is perfect, but the edge is significant because you've done a lot of trades. It's not like you did 1 or 2 trades to prove yourself. You did like already 25 trades in just 3 days. That's a big sample to show you that things are working. And obviously, I haven't even expanded this to the Dow and anything else. Where if I create the right parameters, I think I could hit those parameters as well. But whether you choose one trade, and you do see actually what's interesting is that you see how one trade is very, very capital efficient, right? But remember, this was like 3 days worth of, this was 2.5 days worth of trading. You made 30 points on that one trade where you were trading. You made 110 points, but that was over like a 2-week period, right? And you obviously could give back 30 of those points in just 2 negative trades. So conceivably, you could be like at 80 points over 2 weeks. Overall, what is really fascinating about the market is whether you use a single trade strategy or a multi-trade strategy. In the end, it's a very efficient mechanism. The edges are thin, and you're probably going to wind up with pretty much the same 40 points per week, 80 points for 2 weeks kind of average, regardless of how you trade, right? Like the market just doesn't give you those 300-point continuous strategy moves. But if you're getting, 40, maybe even 50 points a week on an automated strategy, it's tremendously powerful, and it's also scalable, which means that now you can take it to a second strategy, to a second instrument, and see if we could do it that way. The whole idea here is to sort of show you how you can trade as an insurance company, or how you could trade as a jeweler with one single selection strategy, and let that play out. So anyways, I hope you guys like that. I wanted to kind of make the presentation for the day today. We actually did manage to catch a couple of trades here. Right now, nothing is really setting up until I get, if I get a strong break here, then that would trigger my 25 trade on the move. But basically, you guys get the idea, and I invite you guys to look at other instruments and other ways to trade it, because I think you'll find it really interesting. The thing that's hard to accept is if you want high accuracy, you absolutely have to go for very little targets. And you gotta suffer really big stops, because the market can very often will do this to you, right? It will do this to you enough times. Where the hell are we? It will do this to you enough times that if you use tight stops, you're never gonna be positive. So you come in here and it will do this little, sickening move against you until eventually it pops back up, and runs that way. The market never ever goes from here to here every time, or even half the time, or even a third of the time, which is why from here to here trade that everybody always wants to teach you without accounting for the fact that it's going to be big against you, is always a sucker bet. I think we've learned how the behavior of the market. The market never makes it easy for you to make money. It forces you to suffer in order to collect profits. So since, emotionally, none of us are capable of suffering, it's much better to let the algo, which is completely emotionless, absorb the trade to trade vagaries, and ultimately, put the P&L in your favor. It looks like we might have, one final trade setting up right now. Let me see how much time we have. 12 seconds. It's kind of playing around, not really, barely holding on here on the breakout. But yeah, you see how hesitant the Nasdaq is relative. So it did trigger a trade here, and I'll be looking for 1850. I need to see 1850 on this move to bank it. 1725. So, I'll let you know. Okay, guys, I'm sorry, I gotta go because I got meetings, but I'll update you on this stuff. Keep watching this, keep playing around. If you're doing this on CFDs, you can do it on small size. You get yourself very, very comfortable with it, and just, let it trade. Looks like I'm almost hitting it. Almost. I'm going to take it here just to close it out. Yeah, I'm going to, damn. I was talking. Okay. I'm going to just take this trade, but it looks like, it would have hit. It's probably it's going to hit my target. Yeah. I just wanted to close it out because I got to go do those stuff. But here, it almost went to, we need 1825. Is that what I said? What was the high here? What's this? 1800, and I needed like 18. What was my history? I don't even know. Whatever, it's there. I mean, it's close enough to there to have taken the 5 points to give it to you. So we finish up with a good thing. Yeah, I thought you guys would really enjoy it because I think it's like a combination of a lot of stuff we've been working on, and it was actually Kay who made me. Kay's whole thing was, listen, your only value in life here. And by the way, there we go. We're hitting this, completely. So you guys would have made the money. Kay's saying, listen, what members really need is an automated way of trading. Because she's doing the prop way of trading, and she's like, your job is to create an automated way of trading. So I think this is kind of where I'm going. I'm trying to create 2 fully automated strategies that that require a minimal amount of, obviously, you got to know when to come into the market, come out of the market, but everything else is essentially constructed, right? So does that make sense to everybody? Okay. All right, cool. So I'm glad you guys really like this. This was a really, really fun fun session. Let's huddle up. We'll huddle up tomorrow. We'll see where things stand. I'll chime in. So the one good trade got done. The continuation trades keep going throughout the day. I'll kind of let you know what else the day is going, and and then we'll explore other instruments and do everything else. Okay. All right, guys. Everybody have a wonderful day. I'll see everybody later.